What's up, team? Thanks everyone for supporting Sprinter's own channel. Bonus points to all that reached out, since it's absolutely essential for me to get your feedback and plan my further topics accordingly. Let me start by answering some of your questions related to my previous video. Question number 1. How would one identify rate impacting details ahead of time? Referring to cargo weight and dimensions, hazmat, airports, and military base pickups. All of them mentioned, you can ask your dispatcher or a broker directly. In certain cases, information like weight and dimensions won't be available because your customer simply doesn't have it. Therefore, carriers always provide payload and dimensions with each bid. It's a peace of mind to expect all your loads to be at the vehicle's capacity. This helps to avoid any misunderstandings and focus on building relations. When it comes to hazmat, customers and brokers are required to disclose this information in the description. Failing to do so gives you an option to request rate increase or withdraw your commitment altogether while collecting cancellations and layover fees where applicable. If your load requires military base access, your broker or customer will certainly check if you're a US citizen. This is when it's absolutely appropriate to add a couple of $100 to your bid. Now, it is a bit challenging to identify airports ahead of time. Your dispatcher might mention to bring paperwork to a pickup site. This could mean it's an airport or a seaport. You can also map a zip code and check that area. Question number 2. Why do I feel that suggested rates in your video are on the lower side? Love hearing this, and let me clarify. My suggested minimum load rate, as well as my standard operation rate, represent the bottom line, meaning no one should bid any lower than that, while bidding higher is highly recommended. In reality, my minimum load rate can go up to $550, and my per mile rate for long haul can go up to $3. It always depends on rate impacting factors, as well as my gut feeling. Question number 3. Why would you expose cargo van rates? Markets are oversaturated and rates could not be any lower. Well, here's my take on that. This industry will thrive only with all operators understanding the basics. Let's talk it through. Picture a guy just starting out, purchasing and insuring his first van, signing up with some carrier or a few brokers, full of enthusiasm and ready to hit the road. His first loads, he bids higher to justify prior expenses and also study off right. He gets 0 loads and comes to a conclusion that his offers are above market. So he asks his dispatcher for rate recommendations. You know what happens next, right? This operator will work the bottom for an extended period of time, while veterans like yourself suffer business loss for being consistently underbid. Some carriers and brokers build their wealth on disparity of people trying to provide for their families. Here's my solution. We get everyone on the same page, truly understanding the business structure. Then we compete in a transparent environment where our individual services are chosen based on geolocation, reputation, and professionalism. Agreed? Moving along. In this video, I'd like to cover a few more aspects of light trucking that are necessary to talk about. Shall we talk commercial insurance? To operate across state lines, all carriers, non-exclusive owner-operators, and private fleet owners are obligated to maintain US minimum auto liability policy in the amount of $750,000. If you operate non-hazmat vehicle with gross vehicle weight rating of under 10,000 pounds, you're allowed to have $300,000 auto liability policy. However, If you intend to partner with a reputable brokers,
It's really incalculable.
or direct shippers, it's almost always a must to maintain a full umbrella. Here's what most of them expect from you. $1 million commercial auto liability policy. This ensures another party's property damage or bodily injury caused by an accident in which you're at fault. Since our vehicles consistently stay on the road, there is a much higher chance of accidents. Auto liability is the most expensive component and normally varies between $5,000 and $25,000 a year. $1 million general liability policy. This includes accidental customer injuries and damage to customer property. Most common example would be when an operator is contracted to load or unload cargo and damages warehouse property or hurts someone while doing that. Not everyone requires to carry this policy, but it only costs about $500 a year and gives you a peace of mind. $100,000 motor truck cargo policy. This provides insurance on the freight or commodity hauled by a for-hire operator. It covers your liability for cargo that is lost or damaged due to fire, collision, or striking of a load. If you run a reefer, which is a refrigerated vehicle, motor cargo covers losses due to temperature failures. The average cost is around $1,200. The premiums are based on operator's age, driving experience, registered business location, operation radius, business experience, and you'll be surprised, credit. While we cannot affect on certain criteria, we can set adequate operation radius to save on costs. Local radius covers your home state, great for someone focusing on local operations. Intermediate radius lets you run up to 200 miles. It's an entry-level radius to qualify for interstate authority and can be used for regional operations. Long-haul radius covers you across the country. It is a preferred policy for OTR operations. Which insurance company should you choose? It's pretty straightforward. About 90% of light trucking policies in US are handled by Progressive, and they offer the whole umbrella of 3 components under the same roof, but it does come with a price. Give them a call and get a quote. Another approach that I personally recommend is working through a local insurance agency specializing in trucking insurance. You can simply search trucking insurance near me and speak to a few higher rated insurance agents in your area. They might even offer you Progressive, but it is unlikely they will be able to negotiate you a better rate than you can do yourself. How can you negotiate a lower rate? There are a few things to remember when requesting your quote. Transporting hazardous materials will increase your premium. State that you'll only transport general freight unless you intend to haul hazmat. Loading and unloading cargo by yourself will also increase your premium. State that you'll be carrying no-touch freight unless you operate truck with a ramp or lift gate and intend to use a pallet jack. Having experience in this industry helps lower your rate. Insurance companies feel more comfortable covering someone in the business, so make sure to mention that if you do. Being the only driver operating your business vehicle is a huge plus. Adding other drivers will increase your premium, especially if those drivers have negative factors on their driving record. Having another insured personal vehicle under your name is also beneficial. Even being additionally insured with someone in your household counts. This tells insurance company that you won't use your operation vehicle outside of course of business. Your insurance agent might ask you if you maintain your own authority. If you don't intend to apply for one right away, you can always say that you plan to work locally or lease onto some reputable carrier. Most policies will require you to pay 20% of the premium upfront, followed by monthly installments. A little tip for you: always keep your insurance deductible under $1,000. A lot of brokers require that. Time to cover interstate authority. Will your operation require you to maintain US DOT registration or also MC? Simple answer is yes to both. US DOT number identifies a carrier operating in interstate commerce, while MC registration identifies for-hire operators transporting regulated commodities in interstate commerce. Majority of freight in your routine will be regulated. Do you need to form LLC, corporation, or act as a sole proprietor? There are many legal and educational resources online to help you make this decision. In my opinion, keeping it low profile is the way to go if you intend to run as owner-operator. Staying as a sole proprietor will save you money and additional tax liabilities. Some might say that having LLC or corporation protects your personal belongings from possible lawsuits. It is somewhat true, but many lenders, property landlords and such will require you to sign personal guarantee note due to your fresh business credit, which basically compromises your protection. If you decide to operate as a sole proprietor and want to sound more professional, first obtain your free EIN online at www.irs.gov/businesses. You can choose DBA instead of your legal name that can be further used when applying for authority and signing up with carriers and brokers. Should you hire someone to file your authority? That depends. I know some people trust this sort of things to professionals, but don't forget, they are people and make mistakes too. So use your best judgment. If you decide to go through this process on your own, proceed to FMCSA website. It's a user-friendly, step-by-step process and will cost you about $300 in fees. US DOT will be automatically assigned to you when applying for MC. MC cannot be obtained without US DOT. If you claim hazmat registration through your MC application process, both your authority registration fee and insurance premium will go up. Which additional filings will be needed to support your authority? BOC3 form. Truckers stay consistently over the road and could be out of reach for longer periods of time. If anything happens outside of your home state, authorities will reach out to a representative in the state incident occurred. BOC3 form includes the list of all representatives in every state you operate, and it must be filed with FMCSA by your process agent. You can choose your process agent by visiting official link. Pick your agent based on their fee, which normally costs about $40, and online reviews. These agents collaborate with similar agencies in other states and add you to their network within minutes. It doesn't really matter which BOC3 process agent files for you. MCS 90 endorsement. This form must be filed with FMCSA by your insurance agent for your authority to become active. It serves as a proof of sufficient insurance coverage. Once you completed your MC application, just remind your insurance agent to generate and file this form. MCS 150 form. This form must be filed with FMCSA every 2 years to keep your registration up to date. This information is essential for your safety scores. UCR, which stands for Unified Carrier Registration. It is a required registration for CMVs, which is commercial motor vehicles. According to FMCSA, cargo vans and box trucks with gross vehicle weight rating of under 10,000 pounds are not required to have this registration. New entrant safety audit. Within the first year from obtaining your authority, you'll be audited by your state police or a DOT inspector for compliancy. They will request online or by mail specific but pretty basic information on your company drivers, vehicles, hours of service, past violations, vehicles insurance, repairs, and inspections. After reviewing provided paperwork, inspector will either schedule to visit your place of business or talk to you over the phone. Inspector's decision will then be addressed to FMCSA. If it's satisfactory, you're off their hook. Maybe celebrate a bit.
Happy, 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 happy.
If your result is conditional, your company passed, but with errors bringing your safety score down, hence your insurance might go up. I'd work on correcting those errors to bring it up to satisfactory. If unsatisfactory, you have failed the audit. FMCSA will expect you to complete corrective action plan documentation requirements, and going forward, they'll ensure you've resolved those violations before letting you operate. It's worth remembering that same DOT inspectors perform safety audit for CMV and non-CMV carriers. So they might ask if you arrange drug tests, medical examinations, or compliant with the LD. Having the vehicle with gross vehicle weight rating of under 10,000 pounds, you're not required to maintain that. Before I let you go today, wanted to give heads up. As soon as you finish filing your authority, your registered information becomes public, and certain individuals download and sell it to private filing agencies, dispatching, factoring, and other trucking-related companies. These companies will bomb you with emails, texts, and calls trying to upsell you things you don't really need, assuming you're following this video in detail. They will make it sound as they're calling you from some official government agency. Don't fall for it. You won't actually get a call from FMCSA or your state. These contacts will ease up a bit after several days. If you enjoyed this video, please hit like and subscribe. Comment below if you have any questions or recommendations. By the way, more interesting topics are already in the works, so stay tuned.